Hey guys, welcome back. Um, so as I was saying in my last video, I think Betterment's a good tool for anybody starting out investing that doesn't want to really learn the details of how to invest, but they know they just need to start investing early to, you know, make something for themselves later. Other than that, if you know anything about investing and you want to do more of it yourself, Betterment is not a good tool. Sorry, lighting a cigarette. Again, not professional, but I'm not a professional YouTuber. So, anyways, if you're interested in this information, you'll watch it. If you're not, you won't. All right, guys. So, anyways, let's say today I just started my withdrawals from Betterment. I'm withdrawing all my money from Betterment. I had a Roth and I had a taxable account. I was losing a little bit of money on the Roth, a few bucks, no big deal. And I made a couple bucks on the taxable. Um, Either way, all they do is invest in ETFs, as I said in the previous video. So I'm withdrawing from there. That's how I very started. And then I found Robinhood. Now, Robinhood is awesome. I love Robinhood. I love the concept of them. I'm impressed with the founders. Um, I understand how they make their money. People are freaking out because they say they're uh, giving your data away or your information. They're not. They they feed the trade. So when you set a buy or sell or whatever type of order, there are different markets or different. Let me just say different companies out there, trading houses that will process that trade and they can send this to any of those different trading houses. Well, those different trading houses is pay Robinhood for them to send their trades or your trade to that house for them to process. The reason they do that is because they have a way of making money off of those trades. I looked it up. I forget the exact details, but it wasn't anything sinister. They're not like, going out and selling your credit card info or stupid stuff like that. It's not that big of a deal. This is how all brokerages work. They all go through a trading house of some sort. So it's not a big fear to have. Robinhood is great. It's easy to use. The app is simple. People that are brand new to investing can, as long as they know what a stock is or an ETF, they can use this, no problem at all. It's a piece of cake. As you can see right now, the value of my portfolio is $3,367.92. Um, these are the stocks I own. I believe I have 35 stocks in here. Um, anyway, this is my current portfolio and the current prices of each of those stocks. And I have nothing but good things to say about Robinhood. If you want to take control of your investing and buy it per stock, you're good to go. The one downfall to Robinhood, let's talk a couple cons here about Robinhood is you can only buy full shares. So you can only buy one full share of a company, which I mean makes sense. If I want to buy Lowe's, I want to buy one share of Lowe's, right? Um, but I can't buy like a quarter of a share or a half of a share or whatever, a third of a share. They just don't do that. It's not made for that. This Robinhood is made for easy purchases and sales and investing of stocks. I think it's a wonderful app. It's completely free. They do have other options for margin and all that, but overall, this is a completely free app. It doesn't cost you anything, and it is amazing. I totally recommend Robinhood. Um, now, the tool or broker that you use should be determined based on your investing style. How are you investing? So Robinhood is good for everything. Um, it's not the best at everything. So let me clear that up for you. So like me, I started investing and I was looking into day trading. And so that's, you buy low, sell high, all within the same day. And I was thinking that's the direction I wanted to go, or at least I wanted to play with it a little bit, see if I make a profit or whether I just lose everything. Um, I know it's a very risky thing because it's just technical analysis of the chart. So you're looking at this chart and saying, okay, well, here's a floor because it's dropped down here. Here, let's look at a longer period of time on any of these stocks. Now, let's go to one of these. Here we go, 1 year. So you'll see it bounced right here, it bounced here, bounced here, bounced here. So it looks like a floor is somewhere around right here. So this is basically how day traders do it. There's a floor down here, and up here it's bounced back down. So there's a ceiling up here. So this is your low, this is your high. So once it gets down to here, you can see little trends where it's starting to go back up. That's where they'll make a purchase, and then they'll wait, and they'll set, say, a sell order or a limit sell order. So once it gets to this point, they'll sell, right? Or whatever point they feel safe at. Then they'll set a stop loss, say lower than that, so they don't lose much. So I was going to get into day trading and that stuff, and with there being no commission fees on Robinhood, I thought, great. But as I was researching investing in stocks and stock market and details and PE ratios and yields and all the stuff there is involved in investing, the more I learned, the more I got attracted to dividend investing, which dividend investing is basically you buy a share of stock in a company. You're a part owner of that company when you buy a share, and they pay out a dividend, so a part of their profits to the stockholders. So if I own Lowe's, their current dividend yield, well, according to this, is 1.56. It's actually a little higher than this. The data isn't constantly up to date on this. But anyways, say here, let me just go. Let's see here. History? Yeah. So as you can see, so genuine parts, say JPC, I have a dividend coming in on October 1st. So they're going to pay me 72 cents for owning one share of that deal. And they're going to do that every quarter. So every 3 months, I'm going to get 72 cents from them. Sorry, need my nicotine. Anyways, so as you can see, as soon as you buy these, you start seeing these dividends come in. And that's addicting. That is addicting. I'm telling you what, when you start seeing money come in and you're doing nothing for it, you just want to buy more and more and more and more. So that's how I got into dividend stocks, and I started researching those. So that's how I end up building up my portfolio right now of like 35 stocks here. And I'm confident in like all of these stocks. I'm not afraid that I'm going to lose money or any of that good stuff. I'm really confident in these stocks. Now, will the value go up and down? Of course it will. But I'm buying these to hold for a long, long time, possibly forever. So anyway, Robinhood, great app. It's good for dividend investing if you want to do this and buy full shares and hold and get dividends and make money that way. It's also good if you just want to buy stocks and then when the price goes up, you want to sell it. So it works great, and it's all real time. When the market's open, boom, it works. You can also do some after hours trading as well. I'm not going to get into all that, but long story short, highly recommend Robinhood. That was my next step in learning on investing and how I got into dividend investing. I'm going to go ahead and close this video up at this point so it doesn't get too long, and then I'll come back and talk where I'm going from there. And that's a decision I just made today. Thanks for watching.